stock sector's performance. Last week, overall, U.S. stocks edged higher last week. This was largely driven by a bullish sentiment tied to expectations of a U.S. Federal Reserve interest rate cut. Leading sectors, the energy sector was a top performer, likely benefiting from rising West Texas Intermediate crude prices, which were up nearly 3%. Laggard sectors, the utilities sector was noted as the biggest faller, dropping almost 1%. Healthcare and materials also saw modest declines. Overall market, growth stocks outperformed value stocks, signaling a preference for higher growth companies in the current environment. Global market condition and news. The global outlook is cautious yet focused on central bank policy. Key driver, the upcoming U.S. Federal Reserve policy decision on December 10th is the dominant global event, with markets widely discounting a 25 basis point rate cut. The focus will be on the accompanying guidance from the Fed regarding the path of rates in the coming year. Regional activity. India's Sachs and Nifty 50 ended the prior week with healthy gains following an interest rate cut by the Reserve Bank of India, RBI. Europe, Stoxx 600, posted moderate gains on hopes of both U.S. and U.K. interest rate cuts. Asia started the new week on a cautious note amid tensions between China and Japan and soft economic data from Japan. Major exchange trends. A significant trend across global markets is the focus on monetary policy easing and its implications for economic growth and inflation. U.S. and Europe, the main trend is the anticipation of rate cuts. However, caution exists regarding sticky core inflation and the pace of future cuts. Technology and growth stocks remain key drivers, especially in the U.S. UK, the market is also looking towards a potential rate cut by the Bank of England, BOE. The FTSE 100 has recently underperformed peers, partly due to declines in energy and financial stocks. Japan, the market sentiment is mildly optimistic for a rebound after a recent dip, but it is complicated by weak GDP data and ongoing geopolitical issues. Movers up. This week, 8 stocks to buy. This selection is based on recent analyst or technical commentary suggesting upward momentum or strong relative performance potential. Exchange and rationale and context. U.S. Nvidia ServiceNow, NOW. Nvidia holds a strong buy consensus with significant upside potential. ServiceNow also has a strong buy rating and high upside. Both are high-growth tech firms favored by market sentiment. UK, AstraZeneca, AZN, HSBC Holdings, HSBA. AZN is a major defensive healthcare stock with strong recent performance. HSBC is the largest UK-listed bank, often a beneficiary of market stability or global recovery trends. Europe, LVMH, ASML Holding, ASML. LVMH is a luxury giant, often resilient, and a granola stock. ASML is a critical semiconductor equipment supplier, tech, and a top European performer in recent months. Japan, SoftBank Group, 9,984. Sumitomo Mitsui Fin, 8,316. SoftBank Group showed a strong 14.6% gain last week, indicating powerful momentum. Sumitomo Mitsui Financial Group is a top bank and has a buy rating, likely benefiting from a stabilizing financial environment. Anticipated news for the forthcoming week. The week is dominated by central bank activity and key labor market data. U.S., the most crucial event is the Federal Reserve policy decision, expected rate cut and forward guidance. Other important data includes unit labor costs and the employment cost index, which are crucial for assessing persistent inflation pressure in the labor market. Global central banks, policy announcements are also expected from the Bank of Canada, BOC, the Reserve Bank of Australia, RBA, and the Swiss National Bank, SNB. Asia, traders will monitor Chinese trade data for November and key Japanese economic figures, including a revision of Q3 GDP. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the stock market performance playlist, the sound of victory. Peace.